It's perhaps that time of the year where people just grapple to, either pay their taxes or, absolutely commence on the return filing process. So for a lot of people, salaried individuals, 31st July is the deadline currently, and as of now, there is no extension process. Generally, the tax return forms sometimes change on a year-on-year basis. So it is very important to know what those changes are. As an example, over the last couple of years, we've been seeing a trend where there are a lot of disclosures now required by an individual in the income tax return. As an example, if you're a director on board of some companies, there are investments in unlisted shares, your residency, if your employees who've gone out and come back, detailed disclosure items. There are changes, minor changes in the income tax return form even in this year. But perhaps the most important change is that, since November 2021, on the Income Tax Traces portal, the government has actually uploaded the annual information statement AIS and the tax information TIS summary, as it's called. And these are very detailed statements giving absolutely your entire history. It actually goes into transaction wise. So, individual taxpayer can really download these statements, go through each and every item, because all your, whether it's interest from savings banks, salary income, dividend income, capital gains, property if you've transferred, your entire statement, detailed financial history comes into these statements. So why is it important? It's important to see these statements and reconcile so that you actually are able to file the appropriate disclosures of your income. It can so happen that these statements which are uploaded by the government of India does not have your complete income data, because they are also still getting there in terms of completeness. So you need to actually reconcile and see if these statements are reflective of your entire financial and non-financial transactions that are to be disclosed in the return of income. The other thing that we've seen is that, last year, yes, there was a new portal and there were some glitches, but the increasing endeavor of the government has been to make this process a smoother process. Over last year, we've seen that, you now have online and offline filing obligations. And earlier, there was a little bit of a complication around the utility that you had to download to be able to get the correct form so that you can input. They have literally simplified the process, and you have now FAQ type of questions popping up on the screen. Do you have this? Do you have that? It makes it very user friendly. So that's another change that we've seen. Vis-a-vis last year, there are some items which are now under the tax net, which you would do good to know about. As an example, if you have, if you're contributing to the Provident Fund and your employee contributions exceed 2.5 lakh rupees, then as you may be knowing from last year, the interest element on this 2.5 lakh and above contributions is now taxable with effect from the last financial year, which was not the case earlier. And the income tax return form has separate disclosure requirements. So going forward, if you're one of those taxpayers who has this interest on employee contributions exceeding a particular threshold, then that again is something for you to be aware of. Then there are some other changes. If you've got, if you're the beneficiary of certain employee stock options and you happen to be in a startup, then again, due to certain tax law changes, there are separate disclosures for such employees to disclose these stock options as well. And over and above, depending on the form that you are filling. So if you are actually filling the ITR 2, and we will get to that in a little later, you have to disclose certain additional information this time. So if you sold certain, property like land or building, then they've asked for details of purchase, sale, and granularity of, if you've added to the cost of improvement of your property, then all those disclosures this year are required, which were not there last year. And perhaps it's for the tax department to just track, because you do have some reliefs that you can claim when you sell a property and invest somewhere else. So by and large, These are some of the changes. To start with, you should really know first what your residential status is. And let's say for the majority of the population who are residents of India, then you should be aware of your streams of income. And earlier one used to rely only on memory and with our supporting documents. Now you have the benefit, as I said, of these AIS and TIS, which have been actually uploaded by the department. So you simply first go and download that, reconcile every item. Don't just rely on that, because you should have your supporting documents like your bank account statements, the details of any interest on fixed deposits, the TDS that has been deducted on your income, whether you have those relevant TDS certificates. Very often, we have people these days very commonly investing in stock markets. So all your contract notes, capital gain statements, dividend receipts, depending on what your income is. If you have sold a property during the year, while you largely get your data in the AIS, TIS, it's not 100% foolproof at times. So you must be sitting with your entire list of supporting documents before you get to filing this. There are, as I said, lot of asset disclosures also. So you have schedules in the income tax form which are more in the form of balance sheet. So you have to actually sit and disclose all your assets, subject to your income thresholds. And if you have happen to have any overseas assets, depending on your level of the income tax profile as a taxpayer, then there are onerous disclosures for foreign asset schedules as well. Overall, also, somewhere you must have some sense of your own calculation of tax liability, because you could have paid advance taxes during the year in 4 quarters on your personal income, if any. So sum and substance is that, be in time for the deadline, because if you start last minute, you may be left, grappling for information here and there. If you miss the deadline, there are financial penalties also prescribed. It's a little confusing at times for the common man to understand which form should he or she fill. So first of all, very often people think that the simplest form, which is ITR 1, is basically applicable to all. It is basically applicable if you're a resident of India, if you have income less than 50 lakhs, and you have only salary income and one house property. As I said, majority of the people these days are into stock market, you have capital gains, so then that ITR 1 is not relevant even if your income is less than 50 lakhs. So first is about filling the form, so the which form to correctly choose and fill. So for instance, ITR 2 is the relevant form if you have capital gains, more than one house property. Then again, it depends for self employed individuals. If you are having your own business and profession, then it would be ITR 3, so on and so forth. So, first is the right form. Then we have seen generally that, if you have refunds, then you need to have your PAN, permanent account number, linked to your bank account. So you have to disclose your right bank account where you want the refund to be, coming to. If you have income about 2.5 lakhs, you have to file a return, show the process of claiming the rebate. So you might not have the taxable income up to say 5 lakh rupees, but that doesn't mean that up to 5 lakh you don't file the return at all, because the annual exemption threshold is still 2.5 lakhs. The other thing that we've seen people do is immediately, and in these days of electronic filing, after you file the return, you're supposed to e-verify it within 120 days of filing the tax return. And actually, that process is very simple with Aadhaar OTP linkage, or through your bank accounts. But sometimes people forget to do this. They just think that uploading the return is over and done with from a process perspective. You can even send that ITRV acknowledgement to the income tax office physically, but it's a very simple online verification process, which ideally you should do immediately the moment the return form is uploaded. So don't just stop there, otherwise, your process is incomplete and your return will not be accepted in finality if you don't do that last step of e verification. Some of the other mistakes that I've seen is that you may believe that you have certain exempt income, like let's say some people have agricultural income, some people have interest from provident public provident fund, which is exempt from taxes, or any other income which could be in the nature of exempt income. You still have to disclose that exempt income in the return form, and most of the return forms have separate schedules for disclosure of this exempt income. Then again, if you're a taxpayer who has minor children from a tax perspective, then there are income tax clubbing provisions where it gets clubbed in the hands of the parent, and you're supposed to disclose this minor's income also in a particular schedule. Sometimes we see that you might have got certain net interest in your bank account after deduction of TDS. So it's the gross income which has to be disclosed in the income tax return with appropriate disclosures of TDS in the right place. Some people just simply start from the net income thinking that that's what they have got in hand. So things like this, sometimes inadvertently you forget that you have, when it's when you have house property, there are rules around, how many house properties are exempt from taxes. So if you are a person who's an astute real estate investor and you have more than two house properties which may be vacant, you are supposed to sort of, there's a deemed rental taxation, which also at times people, forget to disclose it. Sit with all your documents and information if you're doing it alone. Look at your, a lot of this electronic data is pre-populated in the income tax form. All your personal details are pre-populated. Check every item. And if you think it's a very complex process still, depending on the heads of income that you have, it may be prudent for you to seek professional help as well. But that is completely your prerogative. But file it on time and start in advance. Give yourself factor some time to be able to be completely ready before you just start inputting the data, and then look at your own calculations. So if you have any resultant tax liability after doing all that, then pay it off, and file on time to avoid unnecessary financial penalties. And sometimes you can't carry forward losses. If you have a loss under any head of income, if you delay the return, you may not be able to get the benefit of carrying forward that loss and offsetting it. So all in all, start early and plan.